Okay, thanks for your time, gentlemen. Just want to quickly understand on the volumes front when it comes to your segmental volumes. Other than home care, your three major segments have seen a decline in volume growth. Can you help us understand why this has happened in quarter three? Because quarter three is largely a festive quarter where we usually we expect a sequential uptick in volumes.
At a meta level, our volumes are ahead of the market. We are gaining volume-led competitive growth. And because we report UVG, which is a mix of volume, which is a combination of volume and mix, as Ritesh just explained, our mix this time is negative, which has taken a UVG and made it flat. And that's on account of the fact that home care, which is a big category in our case, is going quite ahead of the rest of the categories. And we have also an added element of pack mix, where small packs are selling way more than the large packs. And that's specific to this quarter. We expect that to be transitory as things normalize going forward. So that's one reason why the optical number is what it is, which is underlying volume growth. But we do remain very focused on growing volumes competitively. Insofar as the pattern of volumes are concerned, as I mentioned, rural is coming back, and we see that gradual recovery quite sustained. It's urban where we actually see some more pressure, which is driven by factors that are probably macro in nature. And we remain, of course, as mentioned, focused on, in these conditions, driving competitive volume-led growth across our categories.
Okay, and also want to understand, gentlemen, that your beauty and personal care segment, which is the BPC segment, has seen some sort of slowdown because of the slowdown seen in the hygiene segment. Now, to address this in the previous quarter, you have also relaunched and reformulated Lux and Lifebuoy. Can you tell us what the consumer response has been to that?
So just to speak to the hygiene first. So hygiene segment is a large segment in the personal wash market. Lifebuoy is a leader in that segment. And in COVID, we did get the benefit of the tailwind of the increased sensitivity to hygiene. Over the last few years, the segment of hygiene has come down and consumers have moved on to other segments in the market. Lux, being a part of the beauty, is therefore gaining share consistently and is doing very well and is really being expanded across all many demand spaces, including sandals. So on the whole, Lux is robust, vibrant, and growing in a growing segment and expanding into white spaces. We are transforming its proposition from being just for illness prevention, which is quite narrow and becomes somewhat generic, to technology that allows for skin health protection. We're using clear, credible sources such as a dermatologist to make that claim more and more sharp and compelling. We are, as we speak, announcing the change in the biggest stage of all, which is the Kumbh. This month, we will actually unveil the new Lifebuoy. We have revamped the packaging, made it more modern. We are bringing in new assortment. We're expanding into freshness demand space, and we're going to back it with really strong investment on media and below the line.
Okay, point taken, gentlemen. Very quickly, if I could just fit in one last question. You have revamped your distribution strategy to some extent. You've streamlined supply to Kirana stores as well. Can you give me a quick outlook on what the distribution strategy is going to be going ahead?
Our distributors will and have always remained the heart of the HUL's business. And our distribution strategy is clearly, as I repeat, distributor inclusive and Kirana-centric. And that's not changing. We're just trying a new way of taking away a pain that can be done better with technology in very, very large metros, and it's going to be a slow process of expansion because it's very highly capital intensive and requires customization city by city.
Okay, point taken, gentlemen. Thank you so much.